Hello everybody. Again the 2020 paper. Again the 2020 O-level business and accounting paper. Today we are starting this video with the 17th question. We start this with 17th because we did up to 16 in the previous video. All right. We have done up to 16. The 16th question in the first paper of 2020 O-level paper. Paper 1. Right. Here we go. As we know, as everybody know, we know, everybody knows that the question number 17 onwards, all the questions are from accounting part. The type of account that applicable, the double entry principle of increase debit, decrease credit. Increase debit, decrease credit. What is that double entry applying to? Increase debit, decrease credit? Asset. Of course, asset. That's an easy one, isn't it? That's such an easy one. Increase debit, decrease credit. Yeah. Increase debit, decrease credit. Asset accounts. Next question. Answer the following questions, number 18 to 20, using the following information. All right. So this is what they have given us. The case. Answer the 18 to 20 using the following information. And this is the case given. The accounting equation of Ravi's business as at 1st November 2020 is as follows. Right. Accounting equation of Ravi's business. Assets we have 50,000, equity 35, liability 15. Following are some transactions occurred during the first week of November 2020 of this business. Following are some transactions occurred during the first week of November. Okay, first week of November. That means 1 week's transaction. Okay. A. Purchasing a stock of goods, 10,000 on credit. Purchasing a stock of goods, 5,000 in cash. Paying a creditor, 7,000. Selling a stock of goods, 7,000 in cash, which was purchased at selling 7,000, which was purchased. Those goods were purchased for 5,000. That's a profit too. Right. So what? So what are we supposed to do now? Information is given. Oh, the question. We must go to the question. This is the question. What is the amount of liabilities of this business after the above transactions? So we got some calculations to do, right? They're asking about the amount of liabilities. All right. The value of liabilities. Value of liabilities. I normally use this for liabilities. You know what? Because red represents risk, something like that. Liabilities are kind of should be paid back, no risks. So amount of liabilities after the above transactions have taken place. We will go and look at that. Look at that set of transactions. Here we have a set of transactions. Okay. Now, what should we do now? We have assets of 50,000. Okay, assets of 50,000 here. 1st November, as at 1st November, right, beginning. Then we have liabilities of how much? We have liabilities of 15,000 and equity of 35,000. These values will change because of the transactions. Okay, these values will go up and down due to the transactions, isn't it? Due to the transactions. See, you have to record the transactions under the accounting equation. Yeah. Oh yeah, that's what you should do. Purchasing a stock of goods 10,000 on credit. Okay, now you select the transactions which affect liabilities. This is affecting liabilities, isn't it? Is this affecting liabilities? Yeah. Purchasing a stock of goods on credit. This affects liabilities. So we will take this. Purchasing a stock of goods in cash. It doesn't affect liabilities. Paying a creditor 7,000. This also affects liabilities. Selling a stock of goods 7,000 in cash. D. It doesn't affect. Because of purchasing a stock of goods 10,000 on credit, liabilities increase. Stock increase, liabilities increase. Okay. Stock increase and liabilities also increase. By how much? 10,000. Got it? You see? Because of paying a creditor, we pay money to a creditor. So the money that we have to pay, we were owing him, we pay off, and the creditor's value, the liability goes down. Because we pay him, pay the creditor. Liability goes down 7,000. Okay. Paying a creditor 7,000. Assets also, cash also goes down, but that doesn't matter to us now. We are only looking at liability, effects on liabilities. 10,000 increase, 7,000 decrease because of these two transactions. Okay. Then liabilities, 15,000 we have here. 10,000 increase, 7,000 subtract or deduct. How much? 15,000 plus 10, 25,000. 25,000 minus 7, 18,000. 18,000 is the answer. Yeah, so go and see. It's there, 18,000. Next question. What is the transaction that does not change the value of total assets? What is the transaction that does not change the value of total assets of the business as at 1st 11th 2020? What is the transaction that does not change? The transaction that does not change. Does not change. Does not change. That does not affect the assets. Let's go and see. Already, children, we have marked 2 transactions on the board. This also affects the first one we have marked. Yeah, the first one we have marked, see. And the third one also we have marked. A and C we have marked. A and C. Yep. A and C we have marked. Both transactions affect the asset. See, in the first one, in A, transaction A, stock increases, stock is asset. In the second, C transaction, also cash decrease, cash is asset. Now we are searching for the transaction which does not affect assets. From the remaining two, B and D, D of course affects assets, because selling a stock of goods means stock decrease. Stock decrease. Yeah, isn't it? Yeah, stock decrease, because stock goes down when you sell goods. So B, purchasing a stock of goods for 5,000 in cash. There are also, children, we know that when we purchase in this transaction, when we purchase goods, we know that goods increase. So goods are assets too. Goods are assets too. Goods increase. But at the same time, for that 5,000 of goods that we got, see, for the purchasing of stock, rupees 5,000, for this 5,000 worth of stock that we got, then the stock increases, cash decreases, because we pay for the goods. Cash decreases. So 5,000 goods come in, 5,000 cash goes out. No effect on assets. Right? B is the answer. Purchasing a stock of goods 5,000. Yeah. That's it. Let's go to the 20th. 20th. The equity of the business at the end of the first week. We have to calculate equity. We have to do it. Calculate equity. Let's go and see how we can do that. Right. So if they're asking for the equity, children, we must select the transactions which affect equity. Not all the transactions affect equity. Purchasing a stock of goods, 10,000 on credit. Does that affect equity? Purchasing a stock of goods. Purchasing stock of goods, 10,000 on credit. Does this affect equity? No, it doesn't affect equity. Purchasing a stock of goods for 5,000 in cash? No. Paying a creditor 7,000? No. Selling a stock of goods for 7,000 in cash? Selling a stock of goods 7,000 in cash, which was purchased at 5,000. That affects equity because there is a profit. Profit increases equity. We know that. There is a profit of how much? How much of a profit here? How much of a profit here? How much of a profit here? There is a profit of, if you sold 7,000 worth of goods, and the goods, the value of those goods was 5,000, 2,000 is the profit. So there is a profit of 2,000. 2,000 is the profit. It increases equity. Profit increases equity. Losses decreases equity. Yeah, that's how it works, right? Profit increases equity. 2,000. We have an equity of already in the beginning 35,000. 35,000 plus 2,000, 37,000. increase by 2000. Increase by 2000. When it is added to the opening capital, it becomes 37,000. Increase by 2000. Okay. Next, 21st transaction. Following is the credit entry of a transaction occurred in a business. Okay. All right, they have given the credit entry only. Following is the credit entry. Wow. Credit entry. Credit entry only. Cash account credit 4,500, which means cash has gone down. For some reason, cash has gone down. Because when cash goes down, cash is credited. Yeah. And there's a discount received account credit. Discount is an income. Discount is an income. Discount received is an income. That is also credit, 500. What is this transaction? What is the debit entry? Tell me first. Well, it doesn't matter. Does it matter? It doesn't matter. How do we know the debit entry? It doesn't matter. No, it matters. It matters, okay? If cash is credited 4,500, that means cash has gone down. When cash goes down, cash goes out, cash is credited. Discount received also credited. No, that means we have received a discount. When we pay a creditor or a supplier only we receive discounts. So this is a paying cash payment of 4,500 to a supplier. But when there is a 500 discount, which means 500 has been deducted, yeah, and 4,500 has been paid, that means 5,000 we had to pay to this supplier. Yeah, that is the logic. 5,000 we had to pay to the supplier. We paid 4,500 and 500 he deducted. 500 he deducted as a discount. So that is the transaction. That is the transaction. Let's see. Purchase of goods? No. Purchasing goods 5,000 on credit? No. Paying a creditor of 5,000 subject to a 10% discount. Oh yeah. That's how you find out the answer. 22nd. Select the answer that shows the source document and the prime entry book used to record purchasing of 5 sewing machines. Select the answer. Shows the source document and the prime entry book used to record. This is the transaction. Here we go. This is the transaction. Now the transaction starts. Purchasing of 5 sewing machines. Purchasing of 5 sewing machines. At 500 in cash to a garment business. There is something that you should notice here. Children, this is a purchasing of 5 sewing machines. You know, sewing machines, the Mahana machine, you know, operate with the hand and foot. Mahana machine, Juki machine. Yeah, everybody knows sewing machines. This is a purchase of 5 sewing machines. 5 sewing machines, okay? Not to resell. So these are not goods or stock. This is not a sewing machine selling business. This is a garment factory. For garment factories, you don't buy sewing machines to resell. You're not selling sewing machines in this business. You are using the sewing machines in the garment factory for sewing clothes. You are using these assets. So if it is a garment business, children, these sewing machines are bought not to resell, not to be sold, but to use. So this is a purchase of a non-current asset. Okay. What is the source document? What is the source document? Purchase of a non-current asset. Purchase invoice? No. Payment voucher? Yes. Because you pay in cash. You pay in cash. See? In cash. See? In cash. You pay in cash. So, it's a payment voucher. We have two answers with payment vouchers. Let's see. What is the source document and the primary? What is the primary book? What is the primary book? What is the primary book? If it is a cash payment, where do you record? In which book? Purchases journal? No! Not in the purchases journal. In the cash book if it is a cash payment. Okay, that's it. That's it. We found the answer. Easy stuff. This is the answer, children. Payment voucher and cash book. Yeah. You should have this clear understanding about source documents and prime books. That's it. Right, let's go to the next question. 23rd. Here we go. What is the transaction recorded in the general journal of a textile business? What is the transaction recorded in a general journal? General journal. We call it the garbage bin. This is like the garbage. Because children, there's a small reason. All the transactions which cannot be recorded, which do not go to the specialized journals, like the purchases journal, sales journal, purchase journal, sales journal, purchase returns journal, sales returns. Those last two are not relevant to you. But there are journals. There are petty cash journal, the cash book. These are the other prime entry books. The transactions which cannot be put into those prime entry books, all the transactions which are left are put to this. That is why we call it the garbage bin. It's something that I personally use. Okay, you don't have to think about it. Just to, just to make students remember these things. Yeah, so that is why we use that name. It's not a nice name, garbage bin. But just like I said, just to make you remember. You. Right. Let's look at the transactions. Purchasing a stock of goods, 50,000 on credit. Purchasing a stock of goods on credit, that goes to the purchasers journal. That goes to the purchasers journal. Okay. Paying a creditor 10,000. When we say paying, all the payings, cash payments, go to the cash book. So paying a creditor, it goes to the cash book. Goes to the cash book. Yeah. Paying the electricity bill of owner's house. 2,000 from the business money. Now paying means cash payment. No, cash payments, money goes out. Should be written in the cash book. Should be recorded in the cash book. There is another transaction. Third one also starts with paying. Paying means it goes to the cash book. Okay, but here children, electricity bill of the owner's house. No, owner's house. Owner's house. Owner's house bill. Owner's house bill. No, you understand? No personal expense of the owner. No personal expenses of the owner. No personal expenses should be paid with business money. So this situation, in this answer, it says paying owner's personal house electricity light bill from the business money of the business. That is also a drawing. This transaction is a drawing actually. But the prime entry book where you record is the cash book, because cash has been paid, already paid. Cash book credit, drawings account debit. Okay, so this also goes to the cash book, not to the general journal. Then the remaining answer is purchasing photocopy machine 80,000 on credit. That is a non-current asset purchase. That should go to the general journal. That should go to the general journal. All right. This is your answer. Purchasing a photocopy machine, non-current assets purchased on credit. Next question. Petty cash expenses. The petty cash expenses, we know that petty cash expenses are recorded in the petty cash book. Our business for the month of December, last month, is rupees 1,900. Petty cash expenses, month of December, 1,900. Balance of the petty cash book at the end of December, 100. Okay, so total expenses 1,900. Balance remaining, balance remaining 100, which means the interest is how much? 1,000, 2,000. You got how you understood how I did that now, isn't it? Of course. Simple things. Interest is the total amount given to the petty cashier, the float, to make his petty cash payments for the month. He has paid for petty cash expenses totally 1,900. Then remaining at hand 100, which means originally he had 2,000. Easy stuff. Yeah, so balance of the petty cash book at the end of December is 100. It was decided to increase the petty cash interest by 1,000. Then another 1,000 should be added here. Then the interest becomes 3,000. 1,000 from January 2021. What is the amount of petty cash reimbursement at 1st January? Okay. Petty cash interest should be 3,000. Interest in January month. Interest in January should be 3,000. Got it? Yeah. Should be 3,000. Okay. Are we together now? Do you get this? How the transaction, how the calculation is done? Yeah. Okay. Now, children, the problem is this. Originally, the petty cash interest was 2,000. This is the original interest. Then it was decided to increase the interest by 1,000. impressed by 1000. Yeah, then the impressed in January, it becomes 3000. Right? Now, total expenses which were done should be reimbursed. This is the reimbursement. Reimburse. This is the amount that should be reimbursed. Okay, this is the amount that should be reimbursed. Total expenses amount. With that, there's another 1000 which should be increased. So 1900 plus 1000, it becomes 1900 plus 1000, 2900. That is the reimbursement in January. 2900. It's right here. Okay. The petty cash reimbursement in the first beginning of January. Done. 24th. Then we have 25th. What is the transaction that was not recorded in the bank account of the business but included in the bank statement? No. Not in the business bank book, but recorded in the, included in the bank statement. Okay, let's see. An amount of 50,000 was deposited in the bank account. An amount of 50,000 that was deposited in the bank account. Don't we record that in our bank book, in the business bank account? Yes, we record it. So this is recorded. 5,000 dividend income directly received to the bank. We don't know that 5,000 was, credited to the bank account. So we don't record it in our bank book. We don't know. That is the problem. What is the transaction that was not recorded? Was not recorded in the bank account of the business bank book. This seems okay. Issued check of the 15,000 was paid by the bank. We record it in our bank book. Deposited check 20,000 was credited to the account. When we deposit, we record in the cash book. Bank book. This is the transaction which is not included in the. Oh no, that's how you go wrong. Right. See, I did not read the question fully. But included in the bank statement. What is the transaction that was not recorded in the bank account of the business but included in the bank statement? Oh yeah. So that's second answer. That's it. 5,000 dividend income was directly received by. When you don't know that you received 5,000 to the bank account directly. Alright, let me get this straight. The business bank account, bank account of the business, who prepares it? You, if you are the business owner, you or your bookkeeper or assistant. You in your business, your bookkeeper or your assistant prepares the bank account of the business. But if you don't know that somebody has put money into your account, into your bank account, if you don't know, how can we record that? These are the reasons for bank balance in your bank book, in your bank account, and the balance of the bank statement to be different. These are the reasons. Direct remittances, standing orders, bank charges, dividend income directly credited to the bank. These are the reasons. So that is the answer. 26th, the favorable balance of the bank statement as at 1st December is 20,000. Following are the transactions recorded by the bank during the month. Okay. Favorable balance of the bank statement. There was a favorable balance in the bank statement. How happy. Oh, wow. Happy all around. We have money in the bank. 1st December was 20,000. The favorable balance of the bank statement, 20,000. Following are the transactions recorded by the bank during the month. Okay. Checks deposited, we have 5. Payments of SOs, standing orders, 8. Payments for the checks, 12,000. Debtors, direct remittance, 10,000. Okay, these are the direct remittances. Direct remittances. Direct remittances. What is the balance of the bank statement as at 31st December? Okay. What is the balance of the bank statement as at 31st December? Well. The same bank statement balance they are asking. Yeah, the same. Yeah. What you should do is take the favorable balance of the bank statement at the beginning. Okay. At the beginning it was 20,000. We can call it the this is the opening balance. Opening balance or balance brought forward 20,000. Okay. The balance brought forward. That's how you call it. Or you can say opening balance 20,000. Following are the transactions recorded by the bank. Checks deposited 5,000. When we deposit checks, money goes into our bank account and this gets added to the balance. When payments of standing orders, when payments are made, money goes out, cash is paid by the bank, this gets subtracted. Payments for the checks issued to the bank, payments for the checks issued, this also gets subtracted. Debtors remittances, direct remittances gets added. Let's see. 20,000 plus 525 minus 8, 17,000 minus 12, 17,000 minus 12, 5,000 plus 10, 15,000. What is the balance of the bank statement? What is the balance of the bank statement as at 31st December, end of the month? End of the month, 15,000. Got it? Oh, did you understand how I worked it out? Easy stuff, right? Easy stuff. This should be added, this should be subtracted, again added, right, to the opening balance. To the opening balance. Checks deposited should be added. Payments should be, standing order payments should be subtracted. Again, checks issued to the bank and the bank has paid, subtracted. Direct remittances, directly money put to our account, should be added. Okay, done. Let's go to the next question. 27. A trading business purchased 50 packets of milk powder at 400 each. What? 50 packets of milk powder. A trading business purchased 50 packets of milk powder. Milk powder, did you say milk powder? Yeah. Well, milk powder at 400 rupees per packet. Well, this transaction must have happened like 10 years ago. No. Just 1 year ago, a packet of milk powder was 400. Just 1 year ago. Recent inflation in the country has taken the prices of goods sky high. The prices of goods are sky high now. One packet of milk powder, 400 grams packet, is like 1,200. A packet of milk powder, like 1,200. Above 1,000. But those days purchased 50 packets of milk powder at 400 each. So 50 into 400, how much? 20,000. On credit, subjected to a 10% trade discount. Okay. So what should we do here? We should calculate 10% out of 20,000. 10%, and the answer for 10% is 2,000. This 2,000 must be subtracted because it's a discount. Price goes down. When the 2,000 is subtracted, discounted price is 18,000. From 20,000 minus 2,000. Discounted price is 18,000. Yep. Then what are they asking? Subject to a 10% trade discount. If money is paid before a month, a 5% discount will be granted. Again, a cash discount. This is a cash discount. This is a cash discount. What is the amount recorded in the purchase journal? Purchase journal, right. When we purchase, we record in the purchase journal. Purchase journal, what do you record? The discounted price. From the list price minus the trade discount. Subtract the trade discount. From the list price, this is the list price. This is the list price, okay? List price is 20,000. 20,000. Discount is 2,000. Discount is 2,000. Discounted price is 2,000 is 18,000. That goes to the purchase journal. Here we go. This 5% cash discount, children, this is actually deducted if the money is paid. If the money is paid, that comes later. Next, 28 and 2 more left. We're doing 30 questions. Okay, this is 28th. What is the accounting error which made a difference in the totaling of the debit and credit columns of the trial balance? They're asking for the error which affects the trial balance. Yeah. Discounts allowed 500 was credited to the discounts received account and debited to the relevant debtors account. Discounts allowed 500, right? Let's draw some small t accounts. That's how we work out errors. Let's draw some small t accounts. Small t accounts. Some small t accounts here. Work out these errors. Discounts allowed 500 was credited to the discounts received. Okay, discounts allowed account is a expense account. Okay, this is discounts allowed account. This is discounts received account. Discounts received account is a income account. This is an income account. Discounts received. Okay, what has happened here? Discounts allowed 500 was credited to the discount received. Credited here. This is an error. It's an error. It is an error. It's an error. It should go to this account. It should go to the debit side of discounts received. This is the correct place. This is the wrong place. Okay, go on to the wrong place. Yeah. Was credited to the discounts received account and debited to the relevant debtors account. But credited to the discounts received account and debited to the relevant debtors account. Debited to the relevant debtors account. Here, guys, it's like this. Discounts allowed account should be debited. No, discounts allowed is a expense, so it should be debited. When this is debited, double entry is debtors account. Relevant debtors account is credited. This is the double entry. Okay. This is the double entry. Discounts allowed should be debited. Debtors account should be credited. This is the double entry. Now it is balanced. See, it is balanced. But error which has happened. What is the error? Error is that. This is the error. That is the error. Error has happened in the discount received account, credited, but debited to the debtors account. That is also balanced now. It is an error. It is an error. No doubt about that. But the double entry has been balanced now. Discount received, credit. Debtors account, debit. Same amount has gone to the credit and debit side. It's balanced. It doesn't create a difference in the trial balance. No. A purchase invoice of 12,000 was completely omitted. Complete omissions do not create a difference. Rent received 2,500 was recorded correctly in the cash account and debited to rent account. So rent received, if it is a receiving, cash comes in, debit to the cash book, credit to the income account. But correctly recorded in the cash book, but again debited to the rent account. Both debited. That will create a difference. This is it. This is your answer. 28th question, third answer. Next question. 29th. Following is a journal entry recorded in the general journal of a business to rectify an error. This is a journal entry which corrected an error. This journal entry. Okay. This is an error correction. Error correction. Suspense account debited. Discount received account credited. The accounting error occurred is that suspense account debited 2000. Discount received account credited 2000. All right. So that is a correction of an error. Here, children, what you should notice is when the suspense account is involved, which means this error has created a difference in the trial balance. This error has created a difference in the trial balance. No doubt about that. So when the error is corrected, there is an entry going to the suspense account. This entry goes to the debit of the suspense account and discount received account is credited. Which means the discount received 2000 has not been recorded in the discount received account. That is why it is recorded now. Got it? This discount received 2000 is now recorded in the credit side of the discount received account. Means previously the discount received 2000 has not been recorded. It has not been recorded. Now it is recorded to correct that error. So the error, discounts allowed 2000 was debited to the discounts received account. Discounts allowed 2000 was debited to the discount received. No. If the discounts allowed 2000 was debited to the discount received account should be credited and discount allowed should be debited. Total of the credit side of the discount received account was understated. Total of the credit side of the discount received account. Total of the credit side of the discount received account. Was understated. That can be. The balance of discount received account 2000 was not extracted to the trial balance. No. Discount received of 2000 in paying was not recorded in the books. Discount received of 2000 in paying a creditor was not recorded in the books. It was totally omitted. Then it doesn't affect the trial balance. Then no suspense. This is the answer. Okay. Second one is the answer, right? 29th. Let's go to 30th and we are going to end the questions. This video, the questions will be ended from 30th. Let's go to the next question, 30th. The balance of the receipts and payments account. When we see this name, receipts and payments account, we know that it is a non-profit organization. It's a non-profit organization. Not for profit. Of Sucharita society. That is the Sucharita. Sucharita, the most pure characters. Sucharita. society. As at 31st December 2020, receipts and payments account balance 31st December 2020 was 15,000, but the treasurer of the society says that he has a cash balance of 16,500 in hand. The reason for this difference: treasurer is the guy who handles cash in a non-profit organization. Treasurer has the cash. He says he has cash balance of this much, 16,500 in hand. Okay, but the balance of the receipts and payments account, not for profit organization, is 15,000. Right. The balance of the receipts and payments account was 20,000. Was 15,000. Sorry, was 15,000. 15,000. Treasurer has cash balance at hand. He has in his hand 16,500. What is the reason? Income of 1,500 earned from selling all newspapers was not received in cash till. If it is not received, the treasurer cannot have that extra 1,500 at hand. So that is not the answer. He has a cash balance of 16,500 in hand on that day, right? As at 31st December, he has. Treasurer says he has 16,500. Okay. Paid labor charges 1,500 was not recorded till 31st of December. If paid from the treasurer's hand, that 1,500 has gone. So we cannot have this extra. Okay. Telephone bill 1,500 was not recorded or paid. Telephone bill 1,500 was not recorded or paid. Then if it was not recorded, the cash balance is not deducted. And if it was not paid, also not recorded or paid. Not recorded or paid. If it was not paid, that telephone bill amount 1,500 is at hand. Okay, then the cashier or the treasurer is having that 1,500, but if it was not recorded also, cash balance cannot be deducted. Less. Received membership fee in cash 1,500 was not recorded till received membership fee. If it was received, cashier has it at hand, but it was not recorded, then cash book balance should be lower than cashier's cash at hand. This is the answer. Yep. 30th, fourth answer. With that, children, we wrap up this video, this session, up to 30th question of 2020 O-level first paper. Okay, O-level MCQ paper 1. Up to the 30th question we are done. In the next video, we are going to take up from 31st to 40. Somewhat troublesome, somewhat difficult questions according to some children. That's why we are taking it in a separate video. Until that video, until we get together in that, I'm going to leave you here. As always, do your work. Have a good time. Good luck. See you soon.